8 irrefutable laws of investing success. One, cash flow solves your problems. 2, cash is king. 3, buy low at psychological extremes. 4, volatility is your friend. Psychological extremes are accompanied by high volatility. 5, limit your downside risk. 6, diversify your risk. 7, options equal outperformance. And 8, appreciation equals jet fuel. So let's talk about number 1, cash flow solves your problems. People actually really don't get what investing is about. If you want to be truly wealthy, you want to have consistent cash flow, because consistent cash flow is the fuel for your life. Think about it. Why do you work? Why do people want a salary so badly? Because the salary to the worker represents consistent cash flow. It reduces their stress because they know there's more money coming in next month and the next month and the next month. And people will literally sacrifice their hopes and dreams for consistent cash flow. But investing, people don't do this. They buy stocks, they buy bonds, they pay hardly any interest, but they don't truly invest in things that give them cash flow. So if you have consistent cash flow coming in from your investments, it's going to solve all your problems. The greater your cash flow, the greater the life you can lead. Cash flow reduces stress. Number 2, cash is king. I tell my students that cash flow is not a consistent endeavor, it's an opportunistic endeavor. So what does that mean? That means that you can't just go out and buy cash flow whenever you want. You can, but your rates of return are going to be really low. You want to be opportunistic and wait for certain special opportunities. And when those opportunities come along, then you invest. The ironic thing is that everybody's out trying to get consistent cash flow, but if they would just wait in one investment in the right environment, it can make up for years and years of investing in normal or suboptimal environments. And this is because you can buy at such a discount that your rate of return is really high. So, but in order to do this, we got to have cash on hand, because the best investments are going to be made in cash. You're not going to be in a panic. You're not going to be able to go to somebody who's in a panic to sell you an asset and go, wait a second, I'm going to go talk to my bank and I'm going to get an approval and I'll be back in 60 days. That's not what they're looking for. They're looking for a bid right now. So if you're able to be a cash bid in times of stress and panic, you can buy at virtually any price. So to be opportunistic, we need to have that cash on hand. When we have cash, we have bargaining power. We can negotiate because we can close immediately and we can pay upfront. And cash reduces the risk. There's no leverage in cash. So if we buy something and it doesn't work, well, our loss is going to be manageable. Where if we go and buy on a loan with leverage, we could get wiped out. So cash is king. Number 3, we want to buy low at psychological extremes. To be opportunistic with our investments, we need to have cash on hand to have flexibility to make quick decisions. Buying at a low cost basis makes it much easier for your investments to work. Buying low really, really helps. Also, the lower we buy, the higher our yield will be, which then makes the value of the investment that much better, because it'll not only return a lot now, it'll return a high rate of return or high yield for years to come, not just a year or a few months. Number 4, volatility is your friend. Everybody says be wary of volatility. Be very careful and avoid volatility. I'm here to tell you it's the opposite. In periods of high volatility is when the psychological extremes occur that give you the chance to buy so low. And here's the thing, high volatility does not last long. So when it comes along, you need to take advantage of it quickly because it will disappear just as fast. So some of your best investments, you might only have a couple weeks to a month to close before the bottom is put in. So the other thing is we need markets to move to be able to make money. This is one thing people don't think much about. So number 5, we got to limit our downside risk. Always got to play defense, 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 even in times that are volatile. Especially when times are volatile, because limiting our downside risk is going to keep us safe. Every investment should have intrinsic value. The intrinsic value of the investment limits our risk. We don't just buy something, this is key. We don't just buy something because it's cheap, because a lot of cheap investments go to zero. We buy something that has high intrinsic value, but fear and panic have discounted it and pushed it under value. So we're able to buy great assets cheap. The analogy I like to think about is it's like a beach ball in a swimming pool. If you take the beach ball and you push it underwater, the more you push it underwater, there's going to be force. And when you let it go, the beach ball is going to come flying out of the water. So that's how we view buying assets to limit our downside risk. Number 6, we got to diversify our risk. So yes, we're going to buy in a panic. Yes, we're going to buy low. But if we only buy one thing, that could go bad, could go bankrupt, go to default. So if we buy low enough, we diversify, we can have investments that will actually go to zero and we'll still be fine. So we diversify through multiple investments, through multiple strategies. We don't want to just do one thing. So we have a strategy we call the WHAM Dividend Accelerator that's amazing that we teach. You can invest in fixed income or fixed income closed-end bond funds. You can invest in distressed real estate. Multiple investments. In any one of these, if I did them, I wouldn't do just one. I would do multiple stocks in a dividend accelerator. I would do multiple closed-end bond funds. I would buy multiple properties. So multiple investments limit the loss of principal and limit the loss of income in any investment. This is going to happen. Companies are going to go broke. Bonds are going to default, and tenants are not going to pay rent. COVID should have been a big eye-opener for a lot of you, because one of the things we saw, I had a friend of mine told me this years ago, and I kind of found it hard to believe, but he was right on the money. He said, if we get into a depression or some kind of major economic collapse, the government is going to tell all the tenants they don't need to pay rent. I'm like, seriously? He's like, yeah, that's what's going to happen. They'll tell the tenants they don't need to pay rent. What happened in COVID? People just didn't pay the rent. So if you are a landlord and you're not getting rent, that can be really painful, especially if you have loans. Number 7, options equal outperformance. Okay, I'm a big options guy. Options are so awesome for limiting risk and creating outperformance, and yet very few people use them. So we want to use options where available because we can get significant outperformance in our investments. We can limit our loss to a known amount. We get efficient use of capital. We can change the payout profile where we can have limited downside and unlimited upside. We can increase our exposure as the trade works, and we can put on strategies that make money when the market goes nowhere. All these things happen with options. Options are amazing for tailoring to your objectives. Number 8, appreciation equals jet fuel. So what does this mean? We're going to invest based off of intrinsic value and yield. We want to buy low at the point of maximum pain in the market, maximum panic with high volatility. But here's the thing. Economies are going to go up and they're going to go down. They're going to go into recession and they're going to go into expansion. They're going to go into contraction and they're going to expansion. Cash flow makes the investment worth it on its own. You're buying it cheap enough that the cash flow alone makes it amazing. But if we get an economic cycle where we come out of recession into expansion, asset prices are going to start to increase in value. They're going to appreciate. And when this happens, this is jet fuel in your portfolio, and your portfolio will launch. So this is really powerful, but this only happens if we buy low and we get our yield to make sure we're safe. And it's a great investment on yield only. And if the appreciation kicks in, awesome. We don't need it, but we love it. So these were the 8 irrefutable laws of investing success. This is very different than what you'll see in any typical book. Take some time to process what I said and ask yourself, how many of these 8 laws are you doing in your own investing? And if not, why not? Could you open your mind to a different view to see if these could help you? I'm quite certain they will. So stay tuned next Tuesday for our next Trader Tip Tuesday, where we'll continue to show you tips and tricks like this today that will help you take your performance to an elite level. Have a great week. See you next week. Bye.